Hello and welcome to the African Diaspora News Channel. I'm Dagny Zenovia. Tanzania, Rwanda, and Uganda are set to start trading in a single market by the end of this year by connecting their regional stock markets electronically. According to EastAfrican.com, this move will help to reduce costs in trading among companies that are listed across the borders of these countries. This will allow investors in all three countries to buy and sell shares in companies listed in this connected stock market without going through different stock brokers. In terms of value of trade, in terms of stock commissions, Uganda carries the biggest share at 3.28%, which is not only the largest in East Africa, but also for the entire African continent. Rwanda and Tanzania regulate their stockbroker commission at 1.5%. Now, this project has been in development for over 5 years, being led by the East Africa Securities Exchange Association. Some do criticize that this project has been dragging with time, but the association has been making efforts to solve the payment disputes with the software provider, as well as the lack of integration of the CMI software and trading systems of Uganda, Rwanda, and Tanzania. As a result of these efforts, the association plans to remove obstacles in stock trading in the regional market, as well as spur activity in those investments. Infotech Private Limited, a Pakistan-based firm, has been contracted to provide the software that will connect the trading platforms for Uganda, Rwanda, and Tanzania. Now, in terms of stock market in this region, Kenya holds the largest and most established stock market. Kenya pulled out of this joint stock market project in 2015 due to their concerns of having a Pakistan-based software firm being given the contract to link the stock markets of East Africa together. Those behind Kenya's stock market has stated that their concerns with the Pakistan-based firm is due to procurement irregularities. But one can also look at the values of these different stock markets and how exactly does one balance them as a single market where everyone wins. For the first 6 months of 2020, Kenya's stock market, in terms of its market capitalization, stood at about $22 billion, while Uganda, Tanzania, and Rwanda stood at an average between $3 billion to $6 billion in that same time frame of the first 6 months of 2020. Now, this single market project is actually a part of a World Bank initiative who, back in 2011, delegated $26.18 million to create this foundation among East African countries to connect their stock markets, to then later be able to create a single currency, which the deadline for that at the time of starting this initiative was 2024, which is still up for review, depending on how this whole single market, stock market foundation actually progresses or develops. Now, the East African region is not the only part of Africa that is seeking to create an intercontinental stock exchange. Another initiative looking to promote that is the African Exchange Linkage Project. This is a joint venture including the African Securities Exchanges Association and the African Development Bank. This initiative started in 2018 with a grant worth $980,000 from the Korea-Africa Economic Cooperation, which is being used to promote and facilitate cross-border stock exchange and liquidity. The first phase of this project is focused on linking stock exchanges between Benin, Burkina Faso, Côte d'Ivoire, Guinea-Bissau, Mali, Niger, Senegal, Togo, Morocco, South Africa, Kenya, Nigeria, Mauritius, and Egypt. Looking at these two initiatives that are seeking to promote and facilitate cross-border stock exchange throughout Africa, the opportunities in terms of the African financial sector are endless. Once this foundation is solid, this can also result in influencing African currencies to be reevaluating, as well as possibly reinventing them to lend itself to more intercontinental trade. What do you think? Let us know in the comments. Thank you for watching. I'm Dagny Zenovia, and I'll see you in the next report.